Yes.
Setting up.
It's gone.
Yeah.
Oh, there we go. Okay.
If we could get everyone to mute.
Oh boy, you're asking
Oh,
something.
okay. Or just be
No.
quiet, Rocky. Yeah, because I know, yeah.
That's a tough one, me being quiet. That's gonna be a problem.
We'll hear the washer and dryer going in the background, you know?
It looks like it's on.
Yeah. Oh, okay, there it is.
Good morning, Rocky.
Oh God. Who left him on? Where do I delete him?
Undeletable, my friend. Undeletable.
I think we're good.
All right.
All right. Just don't be too far away.
Nope, I'll
Yep.
be there.
Colleen, is it 10:30?
31.
Wayne, Colleen said we're ready to go. You're on mute.
Now I'll call the board of meeting, commissioners meeting for November 19th to order. Please rise for a moment of silence and then the Pledge of Allegiance.
Wayne, I got the prayer if you want.
Okay, go ahead.
All right. Father, I pray for those who are hurting or lonely today, that you will comfort them. I pray for those who are ill, that you will heal them. I pray for those who are concerned about what may come in the next uncertain hours, that you will grant them peace as they trust you. While it is foolish to worry about tomorrow, it is wise to prepare our thoughts and emotions for the next day. Amen.
Amen.
I
I
pledge
pledge
allegiance
allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, for liberty and justice for all.
Okay, these proceedings are being recorded for the purpose of constituting the accuracy of written minutes. Tapes are reused, eliminating recorded records of these proceedings. The first item is the approval of the minutes of the previous meeting held November 12th, 2020.
So moved.
Second.
That was me, Ellie.
Okay, Mr. Arner,
Yes.
Mr. Lucas,
Yes.
Mr. Notstein.
Yes. Are there any guests concerning county business at this time? Hearing none, we'll move on.
The report of executive sessions held.
There was one executive session held on November 18th at 3 p.m. for personnel reasons.
Our first item is the proposed 2021 budgets, operating funds. Motion to present the proposed 2021 operating funds budget of estimated expenditures totaling $48,632,979 and make the budgets available for public inspection in the office of the County Commissioners, County Administration Building, Jim Thorpe, Pennsylvania, between the hours of 8:30 a.m. and 4:30 p.m. until December 17th, 2020.
Move to present.
Second.
Mr. Arner,
Yes.
Mr. Lukasevich,
Yes.
Mr. Notstein.
Yes.
Capital projects, motion to present for public inspection. the proposed 2021 capital project funds budgets of estimated expenditures totaling $10,232,053 and make the budgets available as stipulated above.
So moved.
Second.
Mr. Arner,
Yes.
Mr. Lukasevich,
Yes.
Mr. Notstein.
Yes.
Special funds. Motion to present for public inspection the proposed 2021 special funds budgets of estimated expenditures totaling $3,335,117 and make the budgets available as stipulated.
Move to present.
Second.
Mr. Arner,
Yes.
Mr. Lukasevich,
Yes.
Mr. Notstein.
Yes.
Department reports. The budget transfers.
So moved.
Second.
Mr. Arner,
Yes.
Mr. Lukasevich,
Yes.
Mr. Notstein.
Yes.
There are no supplemental appropriations. Expenditures. Approval of check numbers 21110 through 217311 for expenditures to the general fund clearing account totaling $644,832.98.
Move to approve.
Second.
Mr. Arner,
Yes.
Mr. Lukasevich,
Yes.
Mr. Notstein.
Yes.
The treasurer's report.
So moved.
Second.
Mr. Arner,
Yes.
Mr. Lukasevich,
Yes.
Mr. Notstein.
Yes.
The personnel report.
Move to approve.
Second.
Mr. Arner,
Yes.
Mr. Lukasevich,
Yes.
Mr. Notstein.
Yes.
There was no correspondence received. Advertising. Authorize the advertisement of the public notice of Community Development Block Grant Fiscal Year 2020 Fair Housing Activity required yearly for those receiving federal program funds.
So moved.
Second.
Mr. Arner,
Yes.
Mr. Lukasevich,
Yes.
Mr. Notstein.
Yes.
Bid award for approval, recommendation from the Director of Planning and Development to award the contract for the Community Development Block Grant bid opening on November 5th, 2020 for the Lehighton Borough sidewalks, replace ADA handicap ramps, corners of 2nd, 3rd, and 6th Street on Iron Street, fiscal year 2016, 17, and 18, to Pioneer Construction Incorporated, Honesdale, Pennsylvania, at the bid price of $193,636.11.
Move to approve.
Second.
Mr. Arner,
Yes.
Mr. Lukasevich,
Yes.
Mr. Notstein.
Yes.
Boards and authorities. Airport Authority, reappointment, a 5-year term to expire December 31st, 2025, Mr. Paul Smith of Lehighton, Pennsylvania.
So moved.
Second.
Mr. Arner,
Yes.
Mr. Lukasevich,
Yes.
Mr. Notstein.
Yes.
Drug and Alcohol Commission, reappointment, 3-year term to expire November 30th, 2023, Joseph Gordiani of Nesquehoning, Pennsylvania.
Move to reappoint.
Second.
Mr. Arner,
Yes.
Mr. Lukasevich,
Yes.
Mr. Notstein.
Yes.
A Parks and Recreation Commission, a resignation. Teresa Terry Warden-Garris of Weatherly, Pennsylvania.
So moved.
Second.
Mr. Arner,
Yes.
Mr. Lukasevich,
Yes.
Mr. Notstein.
Yes.
Planning Commission reappointments. 4-year terms to expire December 31st, 2024. Tim Berger of Lehighton, George Carras of Lehighton, and Robert Miller of Nesquehoning.
Move to reappoint.
Second.
Mr. Arner,
Yes.
Mr. Lukasevich,
Yes.
Mr. Notstein.
Yes.
Children and Youth for approval and execution. A fiscal year 2020-2021 purchase of service agreement with Access Services Incorporated of Fort Washington, Pennsylvania, as per the attached rates.
So moved.
Second.
Mr. Arner,
Yes.
Mr. Lukasevich,
Yes.
Mr. Notstein.
Yes.
COVID-19 County Relief Block Grant for approval and execution, awarding of a payment to Lake Harmony Rescue Squad and Ambulance in the amount of $23,667.48.
Move to approve.
Second.
Mr. Arner,
Yes.
Mr. Lukasevich,
Yes.
Mr. Notstein.
Yes.
Animal Shelter, well number 2, change order number 2, Moyer Drilling Services. Change order number 2 to the proposal from Jane Moyer Well Drilling Incorporated of Lehighton, Pennsylvania, to complete the required pumping tests on well number 2 located near the animal shelter as recommended by the county engineer. This change order increases the proposal $180 for a new total of $17,802.43 for pumping the well down and camera to inspect the pitless adapter.
So moved.
Second.
Mr. Arner,
Yes.
Mr. Lukasevich,
Yes.
Mr. Notstein.
Yes.
Planning and Development, CDBG, change order number 1, extending the completion date to the contract with Barker & Barker Paving Excavating of Bethlehem, Pennsylvania for street improvements, reconstruct and repave North Mulk Chunk Road, Palmerton Borough, fiscal year 2018. Due to COVID-19 work backlog, the new contract deadline will be December 31st, 2020.
Move to approve and execute.
Second.
Mr. Arner,
Yes.
Mr. Lukasevich,
Yes.
Mr. Notstein.
Yes.
For approval and execution, change order number 2 to the contract with Barker & Barker Paving Excavating of Bethlehem, Pennsylvania for street improvements, reconstruct, repave North Mulk Chunk Road, Palmerton Borough, fiscal year 2018 for additional pavement milling work. Due to changes to the contract, the cost was increased $17,244 for a new contract price of $83,704. Original contract was $66,460.
So moved.
Second.
Arner,
Yes.
Mr. Lukasevich,
Yes.
Mr. Notstein.
Yes.
Solicitor's report.
Thank you. Resolution for adoption, a resolution honoring Joshua Raymond Long, member of Boy Scout Troop 209 of Palmerton, attaining the rank of Eagle Scout.
Move to adopt the resolution.
Second.
Mr. Arner,
Yes.
Lukasevich,
Yes.
Mr. Notstein.
Yes.
Tax assessment for approval and payment. A communication received from Tax Assessment Bureau verifying the following taxpayer is due a refund of county real estate tax. Property in Penn Forest Township, Felice and Linda Ferruti. Refund due to Board of Assessment Appeals lowering the assessment on the property. The total county refund is $85.50.
So moved.
Second.
Mr. Arner,
Yes.
Mr. Lukasevich,
Yes.
Mr. Notstein.
Yes.
Property in Lehigh Township for Maria T. Camier. Taxes on the parcel were paid twice, so the total refund due for overpayment of taxes is $532.61.
Move to approve.
Second.
Mr. Arner,
Yes.
Mr. Lukasevich,
Yes.
Mr. Notstein.
Yes.
Next, property in Penn Forest Township, Eric and Christine Moore. Refund of county real estate taxes due to Board of Assessment Appeals decision lowering the assessment on the property. The total refund due is $5.51.
So moved.
Second.
Mr. Arner,
Yes.
Mr. Lukasevich,
Yes.
Mr. Notstein.
Yes.
Nothing further.
Further business?
Under further business, Chris and Rocky, I guess this would be the time to elaborate a little bit on what we did yesterday or decided to do starting today due to some people having tested positive in the courthouse or in the courthouse buildings. And because of many issues with courts, we spent about an hour on the phone yesterday afternoon as listed under personnel actions and discussing a game plan with the courts. And it was at that time that for the safety of everyone, being the employees and the public, that we decided it was in the best interest to close all county buildings to the public. The only way they would be able to access any of the offices, now I shouldn't say that way, but we're requesting that you do as much online as possible or by phone. If you really need to contact an office, the offices will be open, and arrangements hopefully will be able to accommodate you. Should you have make an appointment, the department head would have to meet you at the door and transact any transitions or whatever we have to do. It's not an easy decision to make, but we have to protect the public and our employees. We still have to operate and continue to operate the county government. I can't express enough to everyone out there, employees and public, how serious this is right now. We were planning on meeting with department heads later in the week, but things went south in a hurry, and we moved the closing of the senior centers from the 30th up to tomorrow. Senior centers will be closed, or even today. They will be able to pick up their meals today at the door, but that will be the extent of the senior centers for now. What am I missing? We're going to close probably through all next week, especially with the holidays. With Thanksgiving, because those that have tested positive have to be retested. Others around them have to quarantine for so many days, etc. So at least we have the holiday give us a couple extra days to get testing completed and hopefully come back, ramp back up a little bit come November 30th. That remains to be seen. I wish I was more optimistic, but that does not look good at this point in time. As far as Thanksgiving, I personally, we canceled or postponed our Thanksgiving dinner, although we only have about 6 or 8 people coming, and that is going to be held off maybe till next year. Who knows? But you just don't know. People that have been testing positive have relatively minor or no symptoms whatsoever, but are still testing positive. So I really request that everyone take all safety precautions, wear your mask, even in your offices, unless you're alone, nobody's coming in and out, wear it at all times. Take all the safety precautions, washing your hands, sanitizing everything. And it's extremely important that you do that. Chris, Rocky, did I miss anything?
Well, I just wanted to maybe comment on all of this, like there were some questions on what are our precautions that we were taking. I think it's our normal precautions that we've been doing all year. And I said I can't say enough about our maintenance and cleaning staff. Words to come to mind is that they're dedicated, and impressive words come to my mind thinking of them. We always go on and beyond if there's an area that we suspect that was infected, or a person that might not even have been in the building. We're disinfecting the whole buildings. They did maintenance did some last night. This morning they did to make it safe. I think the thing that people were asking, what did we do to make it safe for public, or for the employees just coming into the building? And like I said, we're just continuing on what we have done. I mean, and if there was somebody that had to be not furloughed, that would have had to be quarantined. There were people that were on vacation that were brought in that, weren't even in the mix in the first place. So that's some of our plans. There's people that can work remotely, with laptops, which many of us are doing right now. And like I said, the HR department, I think they've been going above and beyond. I mean, they've been on the phone call, contacting everybody, setting up, testing for everybody to be done. And like I said, I can't say more about or enough about our employees that are working on all these situations. And I just want to get it out there to the public. One of the things, like when I talked to the Department of Health, I called my own doctor yesterday for information. And even like with talking with St. Luke's or Lehigh Valley, the biggest thing is wear your masks. And the thing, if you don't feel good, don't come in. And I think we've been stressing that all along. And I think everybody can see how it has progressed in the last couple of weeks. You have 30 here and 30 there and 30 again. And the thing that really scares me is when you look at it, like one of the days there was 3 deaths. People are getting a little bit better treatment than it was in spring, and the death rate isn't as high, I don't think, but I think we just have to keep that in mind. And I think like Wayne said, wash your hands, wear your mask, and I think it's like one of them things, like even maybe you think maybe in your office you don't, might not need it, but somebody might come into your office without a mask on. So just try and protect yourself. And when you go out, try to protect others. I think we're all in this together. And think of your neighbor and think of your coworkers. And that's all I have to say. Thank you.
I'll just add that this afternoon, the Board of Commissioners will be meeting virtually with department heads, row officers, and the courts, and we're going to continue to examine our processes and protocols. We'll be bringing in a subject matter expert from St. Luke's to help review the policies, procedures, processes we have in place, and we'll continue to look at if we have to further implement any elements of our continuity of operations plan. That's all I have.
Okay.
Commissioners' reports. Mr. Arner, do you have anything else?
The only thing I have is just a comment about the budget. I think that a lot of people see that there's going to be a zero increase. And I think it's on the diligence that we did all, as the three commissioners that we've been doing all year long. And I think our motto was like, try to, I think a lot of people think, don't fix it, or how do they say that? If it ain't broke, don't fix it. I think our motto is try to look ahead, that if we're getting costs that are costing us every year, it's time to replace things that are older. And I think that's where we have made headway, that our expenses have been coming down, that we're utilizing the money a little bit different. And like on my point, I said I still increase, but I think as everybody sees, we have to add, in possibly in children and youth or other departments, that we're going to have to add people because of these different state laws. So we're trying to do our best. Thank you.
Mr. Lukasevich?
Nothing at this time.
Mr. Notstein?
Yeah, I just want to praise our employees. As Rocky had mentioned, some departments, our HR department has certainly been overwhelmed with all the calls from employees and outsiders inquiring what to do, etc. Please follow the protocol. Be patient with them. I know we had one person calling up yelling at them. Don't yell at them. The commissioners, we set the policies. You come to us if you have an issue. Thank you to the departments where we're at minimum staffing. They are stretched out in a lot of departments already with overwhelming caseloads. And things are going up and getting worse, as I said earlier. I'm glad we were able to hold the budget line this year. However, I will tell you that I'm concerned about what the state budget approval will do to us next year. With having a Zoom call yesterday with our interagency council and collaborative board and many departments, talking to MHDS and the mental health units, the drug and alcohols. These caseloads are going up rapidly. Suicides are up. It's overwhelming the whole system throughout. And those things cost money. And I know we were cut several years ago by 10% in the human services budget from the state. And I fear that may happen again when we need the funding the most. So we'll do what we can on our end, but we are mandated to perform and to provide certain services. And they certainly are important when you talk about children and youth and the aging offices, etc., following through with checking on our children at risk, investigating, and those people are still out there in the field doing what they have to do. So I thank them. I commend them for the job they're doing under a very strenuous situation. And that's all I have today. Okay, when you're ready, we'll convene the monthly meeting of the retirement board.
Need to adjourn.
Oh, sorry. Okay, sorry about that. Meeting adjourned. Okay, are we ready to go into the retirement board? We good?
Yep, I'm all right.
Okay, I'll call the monthly meeting of the retirement board to order. At this time, I'll turn the meeting over to our secretary, controller, Mark Sverchek. Mark?
Thank you, Mr. Chairman. Could everybody hear me okay?
Yeah.
Yep.
Okay, great. First, we'll start off with an approval of the minutes of the previous meeting held on October 15th, 2020.
So moved.
Second.
Okay, Mr. Sheehan?
Yes.
Mr. Sverchek, yes. Mr. Arner?
Yes.
Mr. Lukasevich?
Yes.
Mr. Notstein?
Yes.
Okay, thank you. Report of executive sessions. We did not have any executive sessions. Next would be to ratify the warrants, checks number 40638 through 40642, and direct deposit 7009609 to 7009995 for the month of October.
Move to ratify.
Second.
Second.
Okay, Mr. Sheehan,
Yes.
Mr. Sverchek, yes, Mr. Arner,
Yes.
Mr. Lukasevich,
Yes.
Mr. Notstein.
Yes.
Okay. Next would be the retirement activity for the month of October. We had 4 retirement refunds, 1 superannuation retirement, and 1 retiree had passed. And the portfolio value as of October 31st, 2020 was $80,149,851. And in your packets, I believe you also got it digitally. The good news was, despite last Friday being November 13th, the portfolio valuation has recovered to $85,116,925, which is an all-time high. And I believe Sarah Wilson of Marquette will be joining us in the meeting as well. Anyone have any questions on that? Okay, thank you. No correspondence. Solicitor's report.
Nothing to report.
And do we have Sarah on the line?
You do.
Yes.
Good morning, everyone.
Morning.
Good morning, Sarah. Thank you for joining us.
No problem. So do you want me to start?
Yes, please.
Okay. Good morning. I think what we'll do is we've got a couple things in front of you. We're going to talk a little bit about the 2020 Pennsylvania County Pension Plan report. So if you can pull that either in front of you or digitally. And does everybody have hard copy or some working on digital?
I did distribute hard copies, although some people were working remotely, so I think they had gotten a digital copy as well.
Okay. All right. So when we look at the Pennsylvania County edition, we always think that it's a good thing to be able to compare how you're doing against your peers. It gives you an idea of what's going on in Pennsylvania. This year, we had 62 eligible counties that participated, which was 62 eligible counties, 49 participated, and that was about 79%. It was a little bit down, we're assuming that's from the pandemic, not going to conferences. And just so you know that we take the performance from the actuarial report. So counties that have mutual funds might have a little bit of a higher return, but they report gross of fees. So that's just something to talk. We'll see when we look at the performance. Let's turn to page 4. I always think it's always good to go over the defined benefit plan, just so you know it's county contributions, investment earnings, and then we look at the unfunded liability, the defined benefit plans, the green, so that's how well you're funded. And then we look at expenses and benefits. So one of the key parts that Marquette looks at is we try and get you good investment earnings, try and lower the expenses and keep you as funded as possible. And then the county contributions and the benefits are really something that are always going on. The cash balance is the county contributions, the contributions of the employees, the investment earnings, and then expenses and benefits going out. So we always try and manage the funds liability to the portfolio. Let's just turn the page 5, and now you will be in orange, so that's Carbon County, and you are right with a lot of the county classes. You're a 6th county, and then we look at the ADC on page 6. Interestingly enough, the mean ADC. So what we did was we took the 19 counties that have been participating in this pension report continuously. And in 2008, the average mean for the ADC was 1.9 million. Then after 2008, it spiked to 119% to 4.1 million on average the counties were going to have to put in. Even though the equity markets rebounded strongly since 2009, the average county continued to increase through 2012. That was due to the smoothing effect. Remember, in 2008, it went in smooth, because if you had to go in the next day and pay that next year and pay that huge ARC payment, that was just too tough for counties. So the smoothing ended, and what we looked is that the ADCs have dropped over the next 2 years. You can see that in the orange. So look, yours dropped, yours leveled off, and then it spiked a little bit in 2018. The average counties are up about 0.8% for their 2019 contributions. Depending on how this year ends, hopefully it might end in a little bit of a positive. They'll look back last year that you might get a little bit of a decrease in there. If you turn the page, this is something that we will be working on next year. If you look that you're at a 7.5%, that's what most counties' actual assumption is. We're probably going to really try and see if we can move that down a little bit. We know that reaching 7.5% is going to be very difficult. The problem is when you do lower it, you have to put more money into the plan for the first couple of years. Long term, it's a great idea, especially with the pandemic and everything. Probably not possible, but we should just review it every year so you know where you are. You look at projected salary increase assumptions, you're right along with every county, which is at 3.5%. Are there any questions right now? All right, I'll turn the page. Go look at the mortality assumption on page 9. We look that you're at a lower mortality assumption. This has been very interesting. There was a really large spike in the mortality rate, meaning that people were living a lot longer. It's actually come down in the last 2 to 3 years. So we'll probably want to revisit that. We'll bring the actuary in and we'll just look at some of those. I know they talk to you about it every year, but I think in the next 6 months, it might be important that we have both of us there just to kind of go over some of those options. If you turn the page, you can see COLAs were not awarded. Only 3 counties awarded a COLA in year 2020. You only have to revisit that every 2 years to make that determination. And look at where after 2008, that blue line, 2016, 2017, it spiked. You actually had some good years in the market. And then it started to go down, and the fear that the market was going to go down, they stopped awarding COLAs. And then I would like you to turn to page 1314. That's where everybody looks because it's the performance page. And you can see you're in the orange, your 5-year actually is right there. You're at a good rate of return between 7 and 8. Your 10 years, you're on top with all the rest of those counties. So we had about 28 counties returning 8 to 9% annualized over the 10-year track. And then we look at page 14, and you can see right where you were. 2019, you were between 20 and 22%. You can see 18, you were right on top. You've made some changes since 2014. I do want to say 2016, you were on top. I went back to go look at that performance. And yes, you had great performance, but a lot of that was you were overweighted in equities. And then we started to rebalance a little bit in 2017. You had a great return. You met your actuarial assumption, but that's when you started to shift to more diversification, which then benefited you in 2018 and 2019. And then the one thing, turn to page 17. You can look at where your adjusted fund ratio is. So you're between 95 to 100%. You're actually looking very good on funding. And then we turn the page just to 19 and 20, and you can see where your plan vendors are, how many other counties are using your investment consultants. It's nice to know Marquette's leading the way in there. Actuarial funds and custodian, we'll talk about that actually being why. And then we looked at a large majorities at PNC. Turn the page, and this is a number of counties. We look at the active participants. You're about 45%. Retired participants are actually a lot higher in the counties on there. And then terminated vested participants are either employees who decided to take the cash withdrawal once they retired, or unfortunately they passed away. Are there any questions before I turn over to the quarterly report?
Sarah, just
Yeah.
one comment going back to pages 13 and 14. When you look at our returns year over year, the 5-year, the 10-year, and in particular the individual years, except for a couple of bad years, we have basically been doing pretty good, being over our 7.5% actuarial assumption. So don't these pages kind of indicate that it is not an immediate issue for us to lower our assumed rate of return?
Well, actually yes, you've had great performance, and because of your funding level, I think it's just something you need to look at, because when we talk about the projections on where the market is going for the next couple of years, we are due for a correction. We are looking at what's happening with COVID. We are looking at some of the stimulus packages that are coming out, what's going to happen with the markets. It just makes sense to review it. You're in good shape. It's just that going down the road, are you going to be able to justify that 7.5%? Not every year, but a 3, 5, and 10-year 7.5 annualized. So it's just something to look at. It doesn't mean you have to go do it right away. I just caution anybody who's at 7.5 that you should just have the understanding of that. Doesn't mean you need to lower it. It just means you need to look at it.
Very, very good. I was just commenting on that. I agree that it's going to be tough to hit the 7.5, but also I don't like to lower the performance bar for our investment firms unnecessarily.
Yes, I mean, I agree with that. I think it comes in that you are actually sitting in a very nice place, that you're so well funded. It's just we want to keep you at that place on funding, for the next 5, 10, 15 years. And we just want to make sure that we look at it every year. You look at it as a board, you look at it with us and your actuary, just to make sure you're on track.
Very good. No further questions.
Okay, let's turn to the quarterly report. Does everybody have that in front of them? Okay, so what I'll do is we'll go over the quarterly report. We'll look at what's been going on with the market, where you are now, and where we see we're going down the road, especially for next year. I just want to take you to the first exhibit, which is page 1 and 2, and talk a little bit about the Marquette update. As we've been through this pandemic, all of our offices are closed. We're working online unless we have to bring people in to print out things. Other than that, and so, sometimes there's a concern, well, how are you doing? You're in this amazing, very volatile market, but we've actually been doing fairly well. We have grown our assets under advisement to $240 billion as of the close of 6/30. And number of employees, we're actually hiring. Mind you, they're all working virtually, but we've had 2 significant hires. One is Pat McDowell, who is going to lead the OCIO investment committee. And that's something that, we look at we meet twice a week. We review all of our portfolios, we review our managers, and as your OCIO, obviously we're reviewing you. And then the others, we hired Lauren Ward. She's a client analyst, and she will be working with me, so she'll be working with you on your accounts. And then the Westchester office is looking at hiring performance analysts and also another client analyst. And the reason for this is actually we've been growing. Last week, we were just awarded PMRS as a consultant. So even through this pandemic and close down, we've been doing that. And the nice thing we have to say is in the last 10 years, we reached our 10-year with our OCIO. We now have 56 clients in the OCIO product and $8.9 billion under advisement. Are there any questions about Marquette? All right, let's turn and look at this market environment. And that's, it's interesting because it changes almost daily. Jobless rates went up, but personal spending went down. And then we look at what's happened today. They were expecting unemployment not to hit as much, and it's actually elevated, and that is probably because of the surge in the pandemic. We look, though, at the economy, and this is page 1. We looked at real GDP growing at a staggering 33.1% annual rate due to the strong growth in consumer spending. But you have to look at that chart below. That's looking at second quarter. Nobody was spending. We were on lockdown. So that jump, while it was good for the economy, good for the markets, you have to take that into exactly what that really was. We look at fiscal stimulus has supported the rebound. Look at personal income has gone down on page 1. And then the government transfer payments as 1% of personal income. So personal income, 35% of that is government stimulus or unemployment. So even though it's gone up, there's, the story behind it is really not what we want to see. We look at the global economy and look at the growth outside of the US. Now, this is through third quarter, but there has been substantial growth. But then we look at how the fiscal stimulus has affected the percentage of the GDP. So the page 2, look at that. So 44% of our GDP was actually fiscal stimulus. You look at the Eurozone, Japan, and UK and China are actually much smaller. We look at PMIs, you can see that China has rebound, the UK has rebound, and the Eurozone, but Japan has actually not rebounded where we would like to see them. We will see how that looks like in performance in the international markets. If we turn the page, we just want to look at where the asset classes performed. US equities did 9.2%. International did 5.6 for the quarter, but year to date, they're still down. We look at commodities and we look at real estate is still down. Tips are up 3%, but year to date, they are up 9.2%. And then we want to talk about the US markets. What has happened in the US markets? They have rallied. Third quarter was the best quarterly return since 1998. The S&P 500 index finished the quarter with a return of 8.9, turning positive for the year. Through October, it went down, and then now it's back up through November. We look outside the energy sector, which was down negative 19. You can actually see below on page 4, you can go see that consumer discretionary was up. You can see that materials were up for the quarter. So actually they've been putting a lot into going into positive. The one thing you do look, and I was asked this yesterday at a meeting, is why are financials so down? Well, we know financials are going to be really hit next year due to what's the impact of student loans, the default. We know equity, the mortgages. And so really going into the economy, financials are may have a large struggle as defaults possibly could happen. Not saying they are going to happen, but with where we look at the economy, this could be a huge stressor. Also, we look at a large part of that too, is we know that the election, and we'll talk about that a little bit, has a lot to do with where the financial markets are going. If we turn the page, I just want to talk a little bit about this. The S&P has had a great performance. But really what continues to narrow this is the large 5 stocks in the S&P returning a cumulative 41% year to date. That means only 5 stocks are driving 44% of the S&P return. So 495 are not really driving that on the ratio. And the 5 stocks are, we look at those, are Facebook, Apple, Amazon, Alphabet, which is Google, and Microsoft. So at the beginning of when we saw the market turning this year, you wouldn't have wanted to hold them because they completely were the draggers. Then they bounced back up. And we look at that graph below, look at the year-to-date performance. That black line is the 5 stocks. And then you look at this S&P 500 and look at the bottom 495 stocks. While it's nice to have those, you do have, you are looking at those, you do have diversification, you have them, your managers are holding them, but you don't want a manager overweighting in them. So we've been very cautious with that. We want them to keep to their targets due to that, the ups and downs. I had a high net worth client say, well, I should just put all my money in those stocks, and you see them moving up and down. I do want to caution that when you see big movements like those with those 5 stocks, it's really not coming from the personal investor. It's coming from the institutional investor who just has to keep the targets in line. So we see a lot of activity with those, but it's not like everybody's coming in and buying those. We look at what's happened with U.S. fixed income. We'll talk a little bit about that. You know, we put you into some high yield just to get a little bit more of a bump on performance in fixed income. In March, the spreads were about 1,000. Now they're back down to about 500. But going forward, they could possibly go back up. So we're keeping our eye on those. That was a short play for us, but it has done very well. Are there any questions on the market? All right. As everybody likes to do, let's go to Exhibit 3 and talk about how you have done. And then we're going to talk a little bit about your managers. So for the quarter, you ended at the market value of 81.7. You gained 4.2 million, returning 5.4%. And over the trailing 12 months, which takes into account that we've had some rocky times within those trailing 12 months. Remember, fixed income was almost returning nothing last year. You've actually had a net investment gain, 6.6, returning 8%. And then you've had a net investment gain. This is June 2015. This is when Pierce Park, now Marquette, became your investment consultant, and you returned 6.5 annualized with a gain of 26.6. As Mark pointed out, as of close of Friday the 13th, now the market's gone a little bit up and down this week, you had a close of 85.16 million. And I think some of this has helped with some of the diversification we have done with the OCIO, and then you've approved some of that. We look at U.S. equities returned 8.4. The equity composite returned 7.6. The theme remained growth stocks have outperformed value stocks in 2020. One of the things that happened in the first quarter and leaning into the second quarter, there was so much volatility that we saw managers really struggled in that. And that was across the board. You know, we always take a little bit of a tilt to value. Growth keeps outperforming. And that's because managers are looking for anything they can do to get a return. But what we're starting to see now in the last month is a shift back to value. And we're probably going to see that over the course of 6 to 9 months. The portfolio leans maybe 1 to 2% more in value. So we're not taking a big play on that. But when we look at putting in managers, we feel that value over the long term will outperform or stay close to their benchmarks. U.S. equity composite returned 1.2. Now look, the high yield manager that we put you into returned 5.7% for the quarter versus your fixed income portfolio, which did well, returned 1.1. So that little bit gave you some nice performance. Looking ahead, we're going to review your asset allocation. Hopefully, in the next couple months, we'll be able to do some education. I'd like to talk to you about infrastructure, getting that part for diversification. And while we're waiting to put you in a private placement, we'd like to actually put you in infrastructure that's listed now. So we can do that. Review of the investment policy, and then also look towards the whole next year on where we see this portfolio going and what we can do to, you know, put maybe some different managers in there and some more diversification. If you look at the page on page 2, you can see you're right there on your target. We look at the quarter, you were 5.4 versus 5.6, so you're right there with your returns. And then for the year, 2.2 versus 3.5. We know we made a lot of transitions there. We also know that real estate, as we know, is going to have a tough 18 months. Do you want to pull out of real estate? No. Would we like to probably get you a little bit, take some of it out a little bit for the next 2 years, and then we'll possibly fund the infrastructure with that if you approve that. Real estate, I mean, I just drove through downtown Pittsburgh. It's a ghost town. You know, in the middle of the day, we are going to see real estate in the Chicago, New York, you know, they have, they're going to go down a little bit, but like the Clevelands, the Cincinnati's, you know, the Pittsburgh, they are really going to have a tough time with corporate real estate. Are there any questions so far?
Sarah, this is Chris. Yeah, one question, and I know you said likely do an education on infrastructure. And of course, a lot of that ties to the expected new administration. Well, what about looking at renewables and what we can expect in regards to renewables versus, you know, again, petroleum and that type of investments?
I think you've got access to them to do like a private placement in that. We are not suggesting that right now for any of our clients, especially in the public sector, but we do look at that to make sure that you've got exposure to that within your managers. And if we find that you don't, you know, so we look at the overall weighting just to make sure you do. So, and I know infrastructure is a very interesting thing because I guess there is going to be a new administration as of now, and I can talk a little bit about where we see the market going with that. I had one client saying, you know, should we not be in infrastructure? Infrastructure is a very long play, 5, 10, 20 years for this portfolio, because this portfolio has got to last a very long time. So that will come back. Are we good?
Yep.
Yeah. And, you know, we can make sure, and I'll go look at some of the holdings on the managers, but I do know that you do have a lot of exposure to the renewables. Let's turn to page 7 and 8. I just want to talk a little bit about where you are per your managers and some of the changes that we made. So you look at the equity composite and you can say, look, we're down we're at 8.4. The equity composite is 9.2. Well, actually, we have to take a broad benchmark when we look at that, but we really want to look at how each of your managers are doing. So American Funds Washington Mutual, since we put it in May, has done 13.4 versus 6%. It is year to date down 0.5. The benchmark's down 11%. It is outperformed, and it outperformed for the quarter 5.9 versus 5.2. And then we look at GWK for the quarter. They did 3 months 7.0 versus 5.9. They started in May. I know in May they had June. They had a little bit of struggle, so they underperformed. They have bounced back for the quarter, and you know, we have them in a lot of other counties, and they have done extremely well. So we're very, very comfortable with them. So you're right on the market with the Vanguard Dividend Growth, the Vanguard Small Cap Value. Those are your 3 index funds. We may start looking at shifting around the weightings on those, especially in the upcoming months. Are there any questions on your equity managers? Okay, so let's look at the global composite. Since July 13th, it's done 8.9 versus 8.7. Global, Dodge and Cox has done well, 7.1 versus 5.3. Harding and Lover, since May we put him in, has done 11.5. MFS Volatility has done 6.0 versus 4.7 for the quarter, and it's done fairly well. We're probably going to look at changing around your global and possibly removing Dodge and Cox and adding in a different manager there. It's just that because we've just restructured in May, you don't really want us pulling out of managers. We like Dodge and Cox. It's just going forward, we might want to look at where that is. And when we look at replacing a manager, it might not just be because of performance. It might be how it's reacting, how it's weighted with the other equity managers in that composite. Non-US has done 5.4. We put you in a Fidelity Total International Index, and then we also put you in the Schroders, which is right on the benchmark. And one of the reasons why we did do 5.8% in Fidelity Total International Index is we want you to get some exposure, but right now international managers have been struggling a lot. So we do want that exposure. We know going forward, when it's the international markets go up, you'll be able to capture some of that going up. We look at Morgan Prime Property Fund. Now you've got 9.6. We are probably going to reduce that a little bit, and then look at putting you into maybe 2 real estate managers. And then once we do the education on infrastructure going forward, it did year to date, it's only down 0.20. So that is not bad considering this real estate market right now. And it actually had a positive return of 1.1 versus 0.3. And I want to take you down. Look at fixed income did for the quarter 1.2. We did fund that with fixed income. And you're just going to have to hang in there. It's a long-term investment. A Morgan Property Fund is made up of all pension funds that are investing in this one. So they're very aware of what they're doing out there. And it's a value fund. It's not going to go in and try and go do all these flips and everything else. Look at your US fixed income. We look at that. We've done 1.2. Year to date, we've done 7.3. Cease McKee outperformed for the quarter. Year to date, they were just under it. Then you have the US Fidelity Bond Index, 7.1 for the year to date versus 6.8. And then we look at putting in, we did Lord Abbott High Yield. Since we put that in March, you've done 7.2%. So that's really made, it was a good play. We've been doing that with all our OCIO clients. And the reason why we have just been doing it with our OCIO clients is we want to be able to take it out if we need to. And we look at that every week, and probably more than every week there. Are there any questions?
Yeah, Sarah, I have one. I think, I know we haven't been with the OCIO that long, but I would say that with the greater diversification and allocation, to me, it seems to be working better for the county overall. And certainly, I think that infrastructure will be a good idea as well going forward. The other question was, do you have any, I know you don't like to forecast or do any type of predicting, but for the remainder of 2020, what is your company have to say?
I know everybody asks this, and on Friday the 13th, I said, "Oh, we're looking great." This has been a very interesting. I have been in this business since 1993, so I've gone through several elections, through several of the .com, the 208, and usually when we look at the fourth quarter with an election, everybody kind of breathes. Third and fourth quarter, it's fine. This has been a very interesting one due to just the switch of the administration. There's a lot of questioning on, the transition there. And we also have a pandemic that really has spiked. I would say if the pandemic had not spiked as much, I would think that we would just kind of float by till December 31st and kind of look like the market was like this. I think we're going to see some large volatility in the market. I think going forward, depending on stimulus packages, we look at what it means for the markets. The U.S. markets have rallied since late October in light of an increased clarity surrounding the political landscape. Just so you know that since the end of October alone, the S&P has notched an impressive 8.6 gain through market close of November 9th. That was just something that we were looking at just for the election. I think it's going to be a struggle. I think moving forward, we have to see what's going to happen with stimulus. And remember, then we're going to have to figure out who's going to pay for the stimulus down the road. So stimulus is great for the short term. People need it. I'm not saying don't do it. I'm just saying it's that eventually the market's going to have to, we're going to have to pay for it. And with the administration that we're looking on getting in, we're going to look at taxes. If you increase corporate taxes, that's going to be very tough on the markets. They're looking at Biden campaign hopes of making wealthy and corporations pay their fair share. And we know that, for the average person, that's a help for them. But, when we look at the economy, we also want to make sure that corporations are putting back into the economy, that they're hiring people. So that's going to be an interesting thing. We look at the regulations. Now, we do say don't panic. Despite political rhetorics from 1853 to 2015, the average annual rate of returns under a Democrat-controlled White House was 10.7%. So, overall, we've looked at that, over the last 12 presidential elections, only 2 have ended negatively, 2000 and 2008. So looking forward, the S&P has averaged a return of more than 8% in the year following a presidential election. So if we took out the pandemic, we're still looking okay. There's some really good things in the market. One of the things I'd be very cautious about is we've got defaults, the student loans, what's going to happen with them. And then we look at the car industry. Everybody's working from home. Corporations have said, we're just going to keep you at home even when the pandemic's ended. We've, looked at a whole different way of doing business. So those families that had 2 leased cars might be turning one of those leased cars in. No longer, they might not be buying 2 cars. They might just be buying 1 car. So, we look at certain things in the economy and how this online has affected us. So I personally think let's just kind of stay on the sidelines. Let's look at where we are in 6 months. I think you're very well diversified. I also think with the OCIO, you as a board voting for that has made a lot of sense. With this volatility, we're not going to have to wait for 3 months or a month or call you up and have an emergency meeting. We are able to move you in this market. We're able to take you out of something that's underperforming. We're able to bring you back to target on either the upside or the downside. So the market's not going to rebalance you, but we're rebalancing you, which is going to actually mean that you're able to capture gains much faster than waiting, a couple months to decide if you should do it, if you should hire a couple different managers, interview them. So we're able to move around. And I think that tactical ability is actually very good going into the next year.
Thank you. Any other questions for Sarah? Or you have more to cover in the report?
No, I'm done. I just want to, hope everybody is staying healthy and safe out there. Have a happy Thanksgiving, however you're going to do Thanksgiving. I know here we're down to 4 in our household. So, it's if anybody has any questions ever about the market, the portfolio, please feel free to reach out to me. And I really want to thank you. I always enjoy working with Carbon County. I always usually love that drive out to see you and be in Jim Thorpe, and unfortunately we can't do that yet. So I wish you all a happy Thanksgiving. If we can do the infrastructure this year on a virtual meeting, let me know. I can put that together. And also going forward, we are going to mail each of you your books individually, hard copy the week before. That way we've got them. And then if we're doing it virtually, we'll be able to send them out as PDF as well.
Okay, great. Thank you very much, Sarah. And Thanksgiving wishes to you and yours as well. Thank you. Any questions for Sarah? No? Okay, hearing none. Then we'll move on to further business. Is there anything under further business? Hearing none. And Mr. Chairman, do you adjourn?
Solicitor's report?
I'm sorry, I already asked that. He said he had nothing.
Oh, okay. I'm sorry. I missed that. I don't know how.
That's okay.
No further business? Hearing none, meeting is adjourned.
All right, great. Thank you all.
Okay. All right, news media. Where do we want to start here? Dominic, I'll let you go first.
All right. Thank you, Wayne, everyone. For the county building shutdowns, was this a decision made because Dr. Rachel Levine said basically this is going to be on personal responsibility? Are there any positive cases in county government right now? What was kind of the forethought to actually leading to this? I don't want to call it a shutdown, but just a deactivation of in-person services.
As I said in the beginning, that we were already looking at, we saw the caseloads going up. We had planned to meet with our the courts, department heads, and elected officials later this week. But things really started going south, and that is not what had nothing to do with what Ms. Levine has said. We did it because of I'll put it up front, or put it out there. There were some positives in the county. So, like I said, we did do it to protect the public and our employees. We cannot afford to lose, too many people possibly exposed. So we are limiting any exposure possible by asking people to work online, by phone, by appointment, only if they need to. We still have to provide certain services, PFAs, things of that nature. We will be talking to the court system again today before our meeting this afternoon, our Zoom meeting with the employees in the county.
And then my last question, I guess you don't have the answer for this yet, but I mean, I understand this affects the annex building. As far as the court system, is this a decision by Michael Greek? Is this a decision of the commissioners? I guess, do trials still go on? I know you said about PFAs, but do trials go on if we have any?
It was a joint decision by the court system and the commissioners.
That is all I have, gentlemen. Thank you so much.
Okay, thank you, Dominic. Let's see, Amy.
Hello, long time no see.
Yes, too long.
Yes, I know. I have a few quick questions in regards to the budget. Calculating it, I saw that it's a 2.7 million decrease from last year. Why the decrease?
Was that in the total in the capital projects, perhaps? I'm not positive. Jeff is you on the line there?
That's the total.
Yep, that's
overall.
That's the total, Amy. So just remember, the county issues debt over a couple years ago, and most recently, I think 19 was also a debt issuance. As that money gets spent down, they don't have it to spend. So
Okay.
Really, if you want to concentrate, the number you want to concentrate on is the general fund. The general fund last year was about 26.8. This year it's about 27.36. So that was a $560,000 increase, which comes out to about 2%. That's the money that's funded by the taxpayers and the one that affects the taxpayers' pockets. So
Okay.
That's the increase that matters. There was a small increase in the general fund this year.
Okay, and the tax millage is still then 12.25.
Tax millage, there was no increase this year. That's correct.
Okay. Okay, and were there any big ticket items that the public should know about within the general fund budget?
Not, Commissioner can speak to this, but I don't think so. From your perspective, no really big ticket items. I mean, the big ticket items are in the capital projects fund. When you're looking at the project down at 7644 Susquehanna, as well as the Employment and Training Center, or sorry, the Emergency Operation Training Center. So those are big ticket items. The general fund, there really wasn't anything specific to bring up to you.
Yeah,
Okay.
Jeff, I just add the prison roof is another pretty big one, since that's, you know, shy of $1 million, but I think it was about 800,000, which was a big chunk.
Correct. I forgot about that one, Chris. Thanks.
Okay, and just one last question, the final adoption, what week do you then adopt the budget?
December
We're December 17th right now.
17th.
Okay, thank you, that's all I have then, gentlemen.
Oh, you're easy on us today. Okay, Kelly, how about you?
Hello, how are you?
Hi, Kelly.
Yeah, good, thank you.
I was wondering how many positive cases did you have and how many employees is this affecting that are either positive or the associated ones that must quarantine?
I would say we might as well tell you up front with you, 4 positives and I'm aware of, but they're all spread out through various offices, and that's what really necessitates the closing of the courthouse to the public, because it's so widespread, because of the contact people have had in the past week with maybe those individuals. And I don't think we can trace any one of those back to anything common, no common denominator to my knowledge that where they contacted it. It's just so random and very difficult. But, you know, I think that's a fair statement that there was no common denominator whatsoever with those 4 individuals.
So it really just snowballed.
Pardon?
It just kind of snowballed. It just happened so fast.
It happened quick, you know, and I could tell you from what I'm hearing, those that have been testing positive, not only county employees, but the symptoms that these people have or didn't have any symptoms whatsoever, but had to be tested because they were around someone else. They have no symptoms, but testing positive or very minor symptoms. So that's what makes it more extremely important, you know, to everyone to self-protect and protect the others by wearing the mask and sanitizing. And I can't emphasize that enough.
So basically, were these employees tested only because they had contact with somebody else? It wasn't because part of county protocol to be tested?
I can't think of any offhand. I don't know if Chris or Rocky are aware of any of those that were, it's maybe minor symptoms that they might have had that they went to test, or maybe had been in contact with somebody else. But I can tell you not all of them were in contact with anyone known to be in contact with anyone. They all fill out a form every week, you know, have you been in contact? Have you traveled out of state? Do you have any of these symptoms, etc.? Chris, I think you were going to say something.
Yeah, I was going to say Rocky is really running this and kind of our lead on this. So he can talk about the specific process that we have in place and that has been implemented.
Yeah,
Go ahead.
and I think Kelly, like, I mean, I think you've seen that throughout the year. Like, we go beyond on what normally everybody else does. And there could have been somebody that we thought had contact with that person, and that's why they're getting tested. I mean, probably maybe other counties or entities would not do that, but we do that. I mean, and I think, like I said, that's shown what we've done, you know, since January, since this has started. You know, we care about our people. We care about the people in the county. And like I said, if we would have an area where, say, somebody that tested positive at their desk, we would probably do the whole office, the hallway, you know what I mean? Like, we go way and beyond. And that's why I said we've been prepared. I mean, that's why we had them purchase then 25 foggers, that things can be mitigated. And we have a plan that if it really would get bad, we have a backup where a professional mitigation team could come in. But at this point, you know, it's sporadic here and there. And like I said, HR is on the phone with the 2 local hospitals all the time. And we're in contact with the Department of Health, and every day is different. You know, every case is treated different. And I always say the more I learn about this, the less I know. You know what I mean? Because I can't say the less I know, but there's so many different situations, and you could have them 4 people that are positive tested and, with a positive test, and none of them are handled the same. You know, it's just so hard to, but I said, and I think with us shutting the courthouse down, I think that's us going beyond what normally is done.
Yeah, Kelly, I will just add just 1 or 2 quick comments. You know, there's no question that we are adhering as best we can to CDC, Pennsylvania Department of Health guidelines and recommended processes and procedures. You know, as Rocky emphasized, we are really closely interconnected with St. Luke's and LVHN, and leveraging that medical subject expertise. And then lastly, I'd say, we are extremely conscientious of the fact that, the systems are extremely stressed right now when it comes to testing. And we're cognizant of that again, we want to ensure, everyone in the county has access to testing services. So we're not indiscriminately sending people for testing. We're ensuring that they meet the requirements to be tested, so that, again, that limited resource gets to the people who need it most.
Okay, going to the budget. Any specific challenges? I know this year you were able to hold the line after last year, the increase. Anything that stands out for you?
I don't think really. It's a lot of them are beyond our control. I think a major one this year was minor in every office was paper supplies and envelopes and things of that nature. We're taking a hit there, although it's maybe only a couple $100 in each office, but it does add up when you have about 30 different departments.
Yeah, Kelly, I think we saw, and we had great discussions with our financial consultant, Jeff, who guides us through the process. Pension contributions have gone up. Health care, the fact is we had this discussion about, our employees who have more married members who are participating in our health care program than singles adds to that. And of course, we are tied and obligated to existing union contracts. So again, all those things add up. I think the only thing, I know you had a question about how COVID impacted. And I would say, from talking to the controller and the treasurer, tax numbers and hotel tax are actually ended up being pretty good for 2020. And other than, I think the most significant hit was really on our parks, that took a notable hit due to the requirements we had to put in place, to protect the health and safety of everyone who was visiting the park. So for 2020, that was the only, specific large scale COVID one. I think we were still fortunate to have the CARES grant money that we were able to use to offset some of those incurred costs due to the pandemic, to respond to that.
Yeah, I might add that and maybe Jeff would elaborate a little bit more on this, but our revenues have not been going up. Our real estate value throughout the county has been remaining stagnant for the last several years with very little increase in revenues from the real estate. That is our biggest revenue source, is the real estate tax, other than reimbursements by the state for certain positions, the children and youth salaries and some of those items and other programs and grants that we get through the state. And that's why I'm so concerned with the state budget being, coming up soon. I'm afraid of what they're going to do. Like I mentioned, the children and youth, the domestic relations, those issues are going up, with the COVID, crime is going up, and, we're getting nailed with everything. And, we've had more murder cases. I think we had 6 murders this year, which is rare that we get 1 or 2. And when those things come to trial, and I'm not sure how many will come to trial, maybe only 1 or 2 in 2021, but they can get rather expensive. So there's a lot of unknowns at this time. And I hate to say it, but who knows what's going to happen in the next 3 or 4 weeks until we do the final budget. And no county certainly wants to increase taxes, and hopefully the state will come out, and if they come out in the meantime and say they're going to cut us 10%, what the heck are we going to do? Then we're up the creek. We cannot afford to lay off any of our people in children and youth and some of these agencies, human services, at a time when they need the mental health and drug and alcohol services the most. That is when we usually get hit with the cuts. Already we're suffering from the states already from the sheriff's fee bill, that they were legislatively responsible for reimbursing the counties for this training, the hours that the 19 weeks that our deputies are spending at training. Well, if the sheriff can tell you, we'll probably be up to maybe over 90,000, over 100,000 until the end of this year. So that they owe us. It's little things like that, hey, we project our revenue, but it's not coming in.
Kelly, I will add one point to that. We've definitely seen an increase in population in Carbon County, right? And you hear about it even recently. The folks from New York, New Jersey, and other places who are coming into the county. But I'd always ask, you need to look at the new housing starts, right? Because while the population is increasing, you don't see a significant new housing start numbers here in Carbon County. Therefore, we're getting additional stress on our systems in the school districts, in the county, but you're not seeing increased revenue because isn't that new housing that is taking place where you would be drawing that property tax from. So we're in a challenging situation.
Thank you. That's all I have today. Thanks.
Any other questions by the media? If not, I wish everyone a happy Thanksgiving. It's going to be a lonely Thanksgiving, I guess, and please heed the recommendations of the CDC and be safe out there. Wear your mask, social distancing, and take care of yourselves. And hopefully, no meeting next week. It's Thanksgiving, so as usual, we will be closed Thursday and Friday anyway next week. So gives us a little bit a chance to recuperate, and hopefully we can do more when we get back to work on the 30th. See what happens, but be safe, everyone. Thank you.
Right. Take care. Have a good one, everybody.
My last question, Rocky, am I invited to your house for Thanksgiving?
Well, I have a chair out in the front porch. Do you want a table to eat off of?
I mean, I'll sit in your truck if you let me.